Glad to have you back. Now, the capital market plays a pivotal role in economic development, serving as a vital instrument for mobilizing and allocating financial resources. By providing access to capital for various sectors, including agriculture, manufacturing, and technology, the market is a key instrument in facilitating the diversification of the economy. This diversification is crucial for ensuring sustainable growth and reducing vulnerability to external shocks. Amongst many other key roles of the capital market is its ability to mobilize long-term capital for large-scale projects or funding. Well, let's get talking now, and I'm being joined by the President and Chairman of Council, the Institute of Capital Market Registrars, Mr. Oluseyi Owoturo. Thank you so much. It's good to have you here.
Thank you, Tolu. It's a pleasure to be here.
Yes, we're talking capital markets today, but in another aspect. And I like that we are looking at it from this economic aspect. What really would you say, or how is the economic situation impacting our markets, the performance at this time?
Okay, thank you, Tolu, for that question. Interesting. You know, one of the two key steps that the current president took when he came into office, one, removal of fuel subsidies. Two, the discontinuation of the dual exchange rate, created so much expectation, a positive expectation, that the Nigerian exchange in the first quarter, all right, immediately after that announcement, became the best performing, one of the best performing exchanges in the world. That gives you the kind of sentiment around government pulling out the right policies. What we haven't seen is a follow-up to those policies, all right? So you see things slowing down. People are a bit unsure of what next, all right? Beautiful, those first two steps. But the question, therefore, is what next? What are we expected to see? Now, you've seen the Naira go, you know, in different directions. Some weeks ago, it was the best performing. Suddenly, it's the worst performing. Those kind of swings don't help because you need a certain level of stability for planning. All right? So the capital market responds to policy and economic direction. Because if I have you can never predict the future, but where you understand where policy is going, you can begin to do your numbers and say if things hold, you do your scenarios, all right? I say if things hold, this sector is likely to do well. And then you put your money where your mouth is. But where you are not sure of policy direction, or there are too many swings, and the swings are too often, it becomes a bit difficult. So today, you see that the Nigerian exchange is still doing well. But, you know, is here today, there tomorrow. But for us to be able to mobilize those kind of funds that we're looking to, we have to have some measure of stability. All right?
In the external economy.
Exactly. That measure of stability has to be there. So, yeah.
That's really good. But we've not been seeing much of public offers too. What would be the reason, and what does this also mean for the market?
Well, you won't see, okay, so very soon you are going to be seeing the banks, all right? But that is regulator-induced. You know, the capital market responds to activities in the economy. It looks for where there are opportunities. And where opportunities are not being created, then, I mean, look at the story of the telecoms, all right, and what has happened in that sector, and the contribution of that sector to the economy. So imagine that sector was still in the hands of NITEL. All right, so government has to take certain steps, all right, to make things happen. The indigenization decree during former head of state, Obasanjo's rule, his first outing, that you may argue about the proprietary, but that indigenization decree increased the number, I can't remember the exact figures, of the number of listed companies in Nigeria. The Nigerian exchange we see today, the foundation, the size was due to that singular decree. So government has to, and we're not saying that government has to enact decrees or make companies to list by fiat, but there has to be some incentive. So for example, you see that a Dangote Cement, for example, is a public listed company.
Yes.
Transparent, all right? Audited as it should. Accounts are public information. They pay their taxes. Imagine if Dangote Cement was a private company. There are some levels of governance required of a public company. So where government has measures or incentives to get companies to come and submit themselves to scrutiny, because if I'm submitting myself to scrutiny, what I'll ask is, what's in it for me? So today, there is no difference between the tax rate for a public listed company and an unlisted company. All right, so there has to be some measure of incentives. The other is the fact that there are certain government assets that need to come to the market. And when that happens, it creates, human beings, we have this sort of herd mentality. When we see where people are going, the tendency is to follow. Yes. All right, so when things begin to happen, you find it creates some level of assurance and confidence that people who were hitherto not even considering coming to list will also start. So take an MPC, take the power companies, all right? Good enough that there's Geregu Power, at the moment. There's Transcorp Power, but there's a lot of investment required in that sector, all right? Personally, all right, look at the capitalization of Geregu today. Look at it in the hands of PHCN, and how much it was worth and how much it is worth today. So government has to look for those interventions that could help stimulate and create the level of buzz. It's all about buzz, all right? Where that buzz is not there, people are skeptical and they are wondering what is next.
Yes. Indeed, let's now look at the functions of registrars in the entire market and challenges that you face in doing your job. Tell us more about the ICMR. Okay, so the ICMR was set up to improve the practice of share registration. Okay. Now, I'll try to keep it short. Registrars traditionally were rejects from the banks because we're all departments in the banks. So if you were not doing well, what will happen is that the management will send you to the registrar department. All right, so what the ICMR has tried to do is to improve the quality of personnel in that sector. So today, I'm a chartered accountant. I was MD of a registrar company. Our immediate past president is a chartered stockbroker, chartered banker. He was president of the Chartered Institute of Bankers. Our education committee chair is going to be installed as a 22nd chairman and president and chairman of council of the CIBN on Friday this week. So that gives you an idea of what changes have happened in terms of the kind of interventions we made. So today we're able to attract very knowledgeable, very, very well-qualified people into that sector, which is very critical. Our business is largely regulated, and it has to be, we work with CAMA, the rules of the SEC, CAMA, the rules of the exchange. So it is rule-based, and then there's a lot of governance, a lot of ethics, all right? We are sort of like umpires. Every company is required to hold a general meeting every year. At those meetings, decisions are taken. Yes. Those decisions are taken by votes. So we are the INEC, all right? So there's a whole lot of governance around their compliance issues that we help our clients to meet because they have reporting obligations to whether the SEC, whether the CBN, depending on which sector they operate, whether it is NICOM or whatever, or whether it's telecoms. So we have compliance, and on top of all of that, we are the ones that pay dividends, the ones that, what makes you happy when you get your, so basically, so in a nutshell, that's basically what registrars do. And of course, when a company is coming to the market, all right, it is the registrar that takes the applications, processes them, and tells the issuing house, these are the number of applications, this is what we have received,
And that information helps the issuing house to prepare what you call an allotment proposal that goes to the SEC for approval. So our business is highly regulated and depends significantly on information technology. So we have a lot of investments in IT. One of the challenges we faced is the swing in the dollar price, because our inputs, a significant part of our inputs are priced in dollars. So you will see the cost of business going up. And I'm sure it's the same for you too. All right. So we are not immune to all of the things happening within the economy. Yeah.
Very interesting. But back again to the issue of contribution to economic development, because in developed countries, we see how much impact the stock market makes on the entire external economy. But why the situation is quite different in Nigeria? Why are we not exploring that activity?
You know, I think I answered a bit of that question
earlier.
Government has to be deliberate
about this.
Unfortunately, what we're seeing now is that rather than listing, many of the exchanges world over are actually experiencing delistings. All right, because people are looking for more alternative ways of raising capital. All right. So if you are listed, you have to submit yourself to certain reporting, governance processes. But you see, what governments do is to take deliberate measures. So, for example, in government procurement, you could say, look, if you are not a public listed entity, all right, your ability to get government business is going to be limited. And it's the idea of shared prosperity. So imagine Dangote shares in the hands of only Alhaji Dangote. But those shares are in the hands of several Nigerians. Yeah. They are all participating in the prosperity. So when we look at the principle of shared prosperity, the capital market is one of the areas where you can actually redistribute wealth. Because I participate in the risk, therefore I participate in the reward. But when those businesses remain in private hands and are financed through some other means, which may not be as efficient as coming to the capital market, the economy suffers for it. So government has to be deliberate, all right? And we're not saying go and force people to list, but give them incentives. Maybe different tax rates, all right? Maybe if you want to fly, if you are not a listed airline, government officials will not fly you. I mean, you can't say that is discriminatory. We're only saying that if you are not sharing your prosperity with Nigerians, Nigeria's money should not be used to, you get the point. So there are all sorts of things that the government can do to encourage companies to come and list because they see something in it, a benefit in it for them. And then when that happens, we have shared prosperity.
True. Let's look at emerging issues. So interesting conversation, I must say. Emerging issues like AI, blockchain, identity management, how does it also affect your day-to-day dealings?
Okay, so we see blockchain as VAR in football. Yeah. All right, so VAR is assisting the referee. It's not, so blockchain typically is supposed to remove intermediaries. But because our business is more of governance, you need a referee. Even if you have VAR, you still need a referee to take the decision. Oh, this is right, this is wrong. Machines are not going to do that for us. So we see it's still in its early stages in terms of development, but blockchain has a significant potential to impact the way we do business positively. In terms of AI, the challenge is data. AI relies heavily on data and clean data. We haven't done very well in terms of data management. We are seeing a bit of improvement, NIMC, but all of those information need to be talking to themselves. The application of AI in business can revolutionize certain industries in terms of decision making, in terms of what to buy, what to sell, even tracking investments. There are opportunities, but we need to then cure our, so to say, unreliable data sets and improve the way we gather data and manage data.
It sounds really interesting. Let's look at contribution to GDP. What's been the contribution of the market to GDP?
You know that if you look at the companies listed on the NGX,
yes,
all right, and look at their sizes and the tax they pay, number of employees, you know, we have different sectors. So there are some companies in the agri sector that are on the exchange, there are some in telecoms, some in manufacturing, fast-moving consumer goods. But if you were to pull all of this together and say, those companies represented on the NGX, together with all of the activities happening there, if you were to look at the entire value they contribute, it will be something towards like 20%. And guess what? It could be more. Because in South Africa, the capitalization of the Johannesburg Stock Exchange is about 300% of GDP. Wow. Yeah, if my figures serves me right, our own figures are not even up to 100%. Our total capitalization, you know, so we need our capitalization to move. Yeah. Because that's when you begin to see the impact on the larger economy. All right? I tell a story of one very small company with just 1,000 shareholders that started doing business in 2001, that my company brought to the market. Small company. If I mentioned the name, you probably wouldn't know them. I invested some very minuscule amount in this company. Today, my shares in that company are worth about 100 million. Wow. Now, that is the only place, the capital market is the only place you can see that kind of growth. Yes. It's the only place where you can beat inflation. All right? But what created that opportunity? A government policy. So government policies have to be deliberate to say, look, where are the places where we can see real growth? And then bring incentives, all right, to encourage people to invest in those sectors. Agriculture is huge. Agriculture has not tapped the capital market. We see Okomu, all right? Yeah. We see Presco. These companies are doing fantastically well, all right? But, you know, if you remove those two, but agriculture has a huge potential. So the question is, why are we not seeing there has to be government deliberate effort to encourage them?
Moving forward, what do you think the figures will look like considering all of these challenges? Is it clear? Is there going to be light at the end of the tunnel, like it's always said? I'm talking about the performance of the market. What's your outlook for it?
Well, the market will always reflect the economy. True. So if the economy does well, the market will do well. I expect that the economy will do well. There's a lot of work. In fact, I don't envy those in office. There's a lot. I think we underestimate the amount of work that needs to be done. All right? But if government gets it right and the economy improves, you will see significant improvement because the market responds. The market is actually measuring how the economy, but you can use that same market to actually boost the economy. So it's a chicken and egg. All right? So some people will say, which came first, the chicken or the egg? But government does something, it affects the market, that in turn affects the economy. So it's a give and take, so to say.
Interesting conversation. I've been speaking to Mr. Oluseyi Owoturo, and he's the president, chairman of Council, Institute of Capital Market Registrars. We hope to have you in again, of course, to discuss issues surrounding the market and the economy. We really appreciate your time.
Nice having you. It's been a real pleasure.
Thank you so much.
Pleasure is all mine.
Yeah.